Every country on Earth is in debt. The United States owes $38 trillion. Japan owes $9 trillion. The entire planet owes $315 trillion, 3 times the size of the global economy. But here's the paradox that should terrify you. If everyone owes money, who exactly is owed? The answer isn't what you think. Because when you follow the chain of creditors, when you track who actually holds the debt, you discover something disturbing. The world doesn't owe money to anyone in particular. It owes money to itself. But 4 men, 4 bankers across 3 centuries designed it that way, deliberately. They built a system where debt can never be repaid, where governments borrow forever, where interest flows eternally upward, and where the people who designed the trap profit from every payment, every crisis, every bailout. This isn't conspiracy. This is documented history. The meetings happened, the contracts exist, the mechanisms are public record. And once you see how they built it, you'll understand why $38 trillion isn't a problem to be solved. It's the system working exactly as designed. Let me show you the 4 architects, the 4 moments when the debt trap was engineered, and why every government on Earth is now caught inside it with no way out. Before 1694, kings borrowed money the medieval way. They'd approach wealthy merchants or powerful nobles, promise repayment with interest, and hope their treasury held together long enough to keep their word. If the crown couldn't repay, it simply defaulted. The lenders took the hit, the king moved on, and the cycle reset. Crude, risky, and embarrassing, but at least the debt ended. It was temporary. It cleared. Then a man appeared with an idea so strange, so radical, that it would quietly rewire the entire financial world. William Paterson. A Scottish trader, a failed entrepreneur, a relentless schemer, but also a man capable of seeing the one move nobody else noticed. And in 1691, while England was drowning in war costs and running out of options, Paterson spotted a crack in the system and decided to exploit it. England was locked in a brutal conflict with France. King William III needed money desperately. The treasury was empty. Tax revenue was collapsing under wartime pressure. Traditional lenders refused to help because England had already defaulted before. The king had run out of lifelines. That's when Paterson stepped forward with a proposal that must have sounded insane. He told the king he could gather a group of wealthy merchants willing to loan the government £1.2 million, equivalent to hundreds of millions of dollars today, a staggering amount. But here's the twist, the piece of financial engineering no one had ever dared suggest. The loan would never be repaid. Not the principal, not ever. Instead, the government would pay interest forever, year after year, as long as England existed. And to manage this permanent arrangement, Paterson proposed creating a new institution, something the world had never seen before, the Bank of England. The mechanics were revolutionary, almost suspiciously simple. Merchants deposit their gold into the new bank. The bank lends that gold to the government pays interest every year using tax revenue. The merchants receive that interest indefinitely. But the principal, the actual $1.2 million, it would never be returned. Why would anyone agree to this? Because Paterson offered the merchants something irresistible, a government-guaranteed income stream backed by Parliament's taxing power. As long as citizens could be taxed, the interest would flow. And there was another genius move. The lenders received transferable notes, early paper money, which they could trade like currency. These notes were better than holding gold because they generated income. Parliament approved the plan in 1694. The Bank of England was born. The merchants handed over their gold, and England gained the war funding it desperately needed. For the first time in human history, national debt became permanent, not a temporary burden, not a financial emergency, but a feature, a design. And here's the part almost no one explains. The merchants had effectively purchased an eternal annuity. The government owed them 8% interest every single year forever. As long as England survived, the money kept coming. But Paterson's true stroke of brilliance came next. The new Bank of England was granted the right to issue banknotes based on the government's debt. In other words, debt itself became money. The more the government borrowed, the more money the bank could create. This was the blueprint. Government borrows forever, principal is never repaid, interest becomes permanent, and the debt transforms into currency. Brilliant for bankers, devastating for taxpayers, because the people would now pay interest on a loan that was never meant to disappear. Within decades, every major European power copied Paterson's system. France, the Netherlands, even the young United States later took the same path. Paterson died in 1919, not wealthy, not celebrated, but the machine he designed still runs 331 years later. British government debt has never been paid off. It's rolled over, refinanced, and expanded, but never eliminated. Because in 1694, William Paterson didn't just solve England's money problem. He quietly locked the world into the first stage of a debt trap that nations still can't escape today. There's a moment in history that looks small at first glance. A single banker in a cramped Frankfurt shop, counting coins under the glow of a candle. But this man would quietly rewrite the rules of global finance, and nobody alive at that time understood the scale of what he was building. In the late 1700s, Europe was tearing itself apart. Kings were broke. Armies were starving. Nations needed money faster than they could collect taxes. And into that chaos stepped Meyer Amschel Rothschild, with an idea that was centuries ahead of its time. He realized something no one else had fully grasped. Money isn't power, but controlling the movement of money is. While governments fought wars, Rothschild built a network. 5 sons in 5 capitals. Couriers moving faster than official messengers. Financial intelligence flowing across borders before kings even knew what was happening in their own kingdoms. He didn't just lend money. He engineered a system where nations became dependent on his timing, his connections, his information. A king needed funds for a war? He could deliver before the royal treasury even opened its doors. A government wanted to issue bonds. He could move them across borders quicker than any rival. And here's the part most history books mention only in passing. He designed these loans so they could never be fully repaid. Not because he was malicious, but because he understood that a nation in debt keeps coming back, again and again and again. That's the real invention. A feedback loop where governments borrow, pay interest, borrow again, and the lender gains more leverage each cycle. By the time Europe realized what he created, it was already too late. Nations weren't borrowing from a man. They were borrowing from a system he architected. A system that outlived him, outgrew him, and eventually became the backbone of modern global finance. And here's the hook most history books skip. This one innovation from this era still controls the way your government borrows money today, and you've felt its impact your entire life without even knowing its name. By the early 1900s, the world had more banks, more money, and more international loans than ever before. But nobody had figured out how to use debt as a strategic tool, not just to profit from nations, but to control them. That changed with one man, J.P. Morgan. He wasn't a king, he wasn't a president, he wasn't even a military general, but he held something far more influential, the ability to reshape entire economies with a single signature. His name was known in every capital city, yet almost nobody understood the machinery he was quietly assembling behind the curtain. This banker, J.P. Morgan, saw what Rothschild built, the network, the bond markets, the reliance on constant borrowing, and he took it one step further. He realized something chilling. If a country's debt could be tied to another country's currency, you could control its future without ever stepping on its soil. And so began the rise of interlinked national debts, a system where the financial heartbeat of one nation pulsed in rhythm with another's. He introduced mechanisms that look ordinary on paper: exchange rate agreements, international settlement rules, cross-border bond underwriting, boring terms, dry language. But beneath that technical vocabulary was a blueprint for influence unlike anything the world had seen. Suddenly, a government didn't just owe money. It owed money in a currency it couldn't print, to institutions it couldn't regulate, under rules it didn't control. And when a nation controls neither its interest rates nor the denomination of its debt, it doesn't matter who the prime minister is. It doesn't matter who wins elections. It doesn't matter what policies the citizens vote for. The invisible contract governs everything. By the mid-20th century, the world was drowning in two things: debt and uncertainty. Wars had shattered economies. Currencies were collapsing. No one trusted anyone else's money. Nations were printing more than they could back, borrowing more than they could repay, and hoping nobody noticed. But one man did: John Maynard Keynes, a quiet economist with an almost unsettling ability to see the hidden weaknesses in financial systems. Where other experts saw chaos, he saw an opportunity, a chance to rebuild the global monetary order, but on terms that would lock countries into a structure they could never fully escape. His breakthrough idea was deceptively simple. If every nation pegs its currency to one central currency, and that central currency is controlled by a single country, then global power shifts from armies to whoever controls the printing press. And so he began designing something the world had never seen: a system where countries no longer backed their currencies with gold, but with trust. Trust in rules he helped write. It wasn't built in a palace. It wasn't drafted by kings. It wasn't debated by the public. It was shaped in hotels, behind closed doors, by delegates who understood that the world needed stability, even if the cost was sovereignty. Nations signed on because they had no choice. Their economies were bruised, their gold reserves were thin, they needed a lifeline, and this architect, Keynes, offered one. But that lifeline came with a long-term consequence: the end of monetary independence. From that moment forward, if the central currency rose, your currency fell. If the central bank tightened, your economy slowed. If interest rates shifted abroad, you felt the shockwaves at home. And the most powerful twist? The country issuing that central currency no longer needed gold to back it, because the entire world now backed it for them. Debt exploded, money creation accelerated, and a global system emerged where every nation's financial stability depended on decisions made far outside their borders. This architecture still governs your economy today. You feel it when prices rise, when interest rates spike, when currencies swing. By the time the fourth architect's system was in place, the world thought the crisis was solved. Currencies were stable, trade was easier, growth exploded. Governments celebrated. But underneath that celebration, something irreversible was happening. Nations began borrowing more freely than ever before, not because they were reckless, but because the new system encouraged it. If one country needed money, it borrowed. If another country needed growth, it borrowed. If a government needed votes, programs, or stability, it borrowed. And for the first time in human history, this borrowing didn't slow the system, it kept the system alive. Debt wasn't a burden anymore, it was fuel. Here's the hidden twist almost nobody notices. The global economy can't function without constant, expanding debt. If borrowing slows, everything begins to break. That was the final lock of the trap. The system created by the four architects didn't just make debt normal, it made debt necessary, permanent, structural. Every new crisis solved with more borrowing. Every recession, more borrowing. Every stimulus, bailout, rescue package, debt stacked on debt, layered on debt, multiplied through mechanisms designed decades earlier. Nations knew it wasn't sustainable, but they also knew the truth. Stopping the cycle would collapse the system they're trapped inside. And that's the paradox the world now faces. If governments borrow, the debt grows. If they stop borrowing, the system breaks. And if they try to repay the debt, they trigger the very collapse they're trying to avoid. This is why the global debt clock only moves in one direction. This is why every nation owes more today than they did 10 years ago. This is why every solution creates a new problem. Because the trap didn't fail. It functioned exactly as intended. And now you understand the full picture. Not the conspiracy, not the myth, but the documented architecture of a system built across 4 centuries by 4 men who never met, yet designed a machine that controls every modern economy. Here's the final question, the one you should be asking yourself right now. If the system can no longer be fixed, what happens when it finally reaches its mathematical limit? That's the story the world is about to live through.